Hey, it's Mack with PriceActionTradingSystem.com, and it is Tuesday, it's September 1st, starting a new month today. Before we get started on the chart lesson, I did want to make one quick comment. I got several emails today uh, asking about me if I was okay because there was no video on Thursday and none on Monday. But unfortunately, there were videos, but somehow they got marked as private, so people couldn't find them. I don't know how it happened. I haven't really had a chance to even investigate it, but I did go in this morning and correct it when I realized that people couldn't see them. And so they're available now. So there were indeed videos Thursday and Monday, but since they were marked private, obviously nobody could see them. So I apologize. Don't know how they got marked private, but regardless, it happened and it's been corrected. And there are videos out there for Monday and Friday if you want to go back and look at them. Um, Hopefully, I'll double check that for the next couple of days to make sure no more get marked private. And again, I don't know exactly what happened, but needless to say, that's why you couldn't find any videos. So let's talk about today. I'm actually going to remove the uh, previous days open high. Actually, that's the wrong one. I want to get the current days because it's changing now since it's after 3 o'clock, and it just makes the kind of confuses the chart. So I'm taking it off there. I like to use that when I'm trading. That's the previous day's open, high, lows, and closes, and the current day open, high, lows, and closes. Those are all important points, and generally the previous days will come into play multiple times. And really, this support around here was um, some of the stuff from the previous day, or maybe it was maybe it was current day. I'm not sure, but anyway, these points will all be um, come back into play multiple times. So I like to mark those, use those. The current again, this current day open, high, lows, and closes, and the previous day open, high, lows, and closes. Those generally become important points. So just keep an eye on them. They're generally really important. So um, you will see when prices come back to them that they'll react there quite often. So nothing you want to trade on, but it just helps to know where those points are at when something does happen. You know that's important location, and that you probably need to pay attention to it. So in the end today, even though we sold off real heavily in the overnight, we ended up in a trading range for most of the day. Once we went lower here, there were two different targets I would shoot for. One would be the move from here to the low here. So that would be from there down to this low right here. And then you go to where we started the correction, which is right here, and that gives you a target of 1900. We went a little bit lower than that. If we had continued trending lower overall for the day, I would have looked for a measured move like this from the high to low, and then I would have found the high over here, which was here. And I would have looked for that for my next target, which found around 1885, but we didn't get down there. Early this morning, I was looking at a possible trend right here. Actually, let me redraw that. Right through here because we had these touches across here, but when we came back to it the next time, we went right on through. It may have still been valid. We broke, and then we made a new low, and then we corrected. But I just really, and it does fit. If you look, you'll see that it fits on the lows here, and then there's a midpoint right across here that it fits. So I'm not going to say it wasn't valid, but I don't think it really, I don't think you needed it. If you use the range, the range was the bigger pattern that seemed to be affecting prices the most. And you can see that we were in those two tiers of trading range pretty much all day till we broke lower. And by the time it broke lower, it was after 2 o'clock. So for all intents and purposes, that's our trading period from about 7 o'clock right in here till 2 o'clock. And for all intents and purposes, we were in a two-tier trading range. So that's all that you really needed, other than the short-term trend lines. Definitely draw those short-term trend lines because they do come into play, and they're important. So um, I'd say pay attention to them. So, but let's back out, talk about the trades. The volume still continues to be high. You can see there's a lot of volume there. Some of the bars continue to be larger. I talked about that in some of the last couple of days. So nothing's really changed. Same rules apply. If you can't get in on your 2 point stop, then you gotta increase your stop and go for a bigger target. Nothing else you can do. It's really just as simple as that. Either that or you just have to skip the trade. So there's a trend down there too. So there's actually some other shorter term trends in here. Okay, I had a slight interruption there, but we will get back to the trades, and we'll start talking about the trades. But anyway, we were trending down, so really up until right in here, the bias was more down than anything, but it still had that, when you're swinging back and forth both sides of the EMA like this, you know, that gives you that um, range type flavor, a range type feel. It's a good indication that, hey, this is kind of a range. Now, you never know if this is a temporary correction in a bigger downtrend, and that's what you got to be careful of. But all the same, when you're swinging back and forth and it's flat like this, you can trade it both ways pretty much, because this is a strong downtrend does not do this right here. Now, it doesn't mean that it can't start going down and become strong again. So make sure you understand the difference. But once you're trending this long to the upside, that's not really a strong downtrend, because strong trends do not have that big a correction. So doesn't mean that you can't get if it's a bigger downtrend, you might get a bigger correction. But hopefully you can understand the difference between what I'm saying there. Once we started, we started trying to correct a little bit, then you get a little more. Notice how you're barely above the EMA here, then you're well above it, and then now you're really well above it. That's just, this EMA works very similar to the trend line. You get that first break, and basically what you got here, you got a trend line working down, you get a break, and you've got two measured legs to a new low. So that pretty much gives you everything you need. It's not quite a measured leg, but you can see how close that is. The fact that you don't get two measured legs tells you that, hey, we may move a good bit, further, more strongly in the other direction. Um, so you got to go with this trend, and you can trade this to the upside. No reason you can't. But anyway, let's talk about the trades now. We're working down. There was a possibility, and it's probably valid. I mean, you can see this little channel here, and you get the break and two legs down. So even if you saw this as a spike in channel, or if you saw it as a channel, it works the same either. Okay, phone just won't quit ringing. But anyway, you could have looked at this either way. You got the main channel coming down, the break, and the move down. Or you could look at it like a spike and a channel down with a break and the two legs down. So it worked out either way, no matter how you saw that. And that just, that's a good example of, you don't have to see it exactly the same as everybody, but you have to read it properly. And I think reading it either way is proper. And you got the same result no matter how you read it. So it all worked out. But anyway, we're working down. We've got this channel. We got a break and a new leg. Of course, then you got the correction going here, and this is where people get really confused. People think, okay, we had the break and a new low, and now we're trending up, but you got to draw your trend line the other direction, and you got it working up here. There's no doubt that's a valid channel working up there, and suddenly, really, this is probably a little bit lower. This is kind of questionable if you actually got a break here. So I believe that you do, but it's questionable. So, but then you get a clear one here and a new high, and then you wait on that second entry off the other side, and you get a nice, you come down and you push through the EMA and you pull back and then you get that nice bearish bar. So I like that for a short, figuring that you're going to at least try to make another leg down, or at least test this low again. And this turns out to be a really good, both of these. You didn't get a runner on this one, but then you get that failed second entry long there, and it turns back down, and you can just go short. So um, all this stuff really occurred prior to, me even getting to the office. So this was the first trade that really set up. So if you're trading here, you could have argued for a possible long. You really don't you get a failed second entry short right here, but I don't really like that for a long. But that's even before 6 o'clock, so it's really irrelevant uh, based on the way we try to trade this. So, but these were two really good setups. This is a breakout pullback short here, and it is a second entry, but you don't get a very good signal bar. It is the first break of this, but there's not much room between there and that low, so I think it's really risky. So I don't like going short there. But now you got this new, notice how it doesn't go very far, and then you get that little trap. It's tempting to go long right there. And if you're being really aggressive, you really could go long there. There's probably enough room between there and this high and the EMA to scalp out. So I'm not against making that a green circle. And even though that's got a little bit of a red tint to that signal bar, it's really still a bullish bar. It could have easily closed. It's just flipping up and down right there. And it could have easily, on your chart, it may be more bullish looking than that. And but then I think you're better off to wait here. There's the failed second entry short is actually right here. Or right here when it breaks above. I'm sorry, when it breaks above here. But I don't think you want to go long right there. Um, you've had too big a move up. I think you're better off to wait. But when it comes back and it touches that trend line and confirms that trend line right up through there, and bounces off of it and gives you a second entry counting from the high, pullback, first entry, pullback, second. I like that one. And this is where you're expecting to get a trap. So with this being a really bullish bar, even though this broke higher and turned and went out the other side, I don't think you want to go long or short right there, especially now that you've had everything's fallen in place for a reversal. And that's what I've talked about that some recently. This is where you expect to see a possible trap. And so you want a really good short setup, a better one than that before you're going to go short again. And this is the kind of longs that you're looking for on a reversal type pattern. And I'm going to do I think we already have some chart lessons on that, but I'm going to do a chart lesson in the next few days that just talks about reversals. So that'll be there for our premium members. So just be looking for that. It'll come out in the next few days as soon as I get a chance to do it. But then now you're working higher. You got a confirmed trend line, then you get another bounce. You could even argue to go long right there. It's right off the trend line, right off the EMA. And we're working up. There's really no break of that trend line yet. So you could argue for another long there. I'm not against giving that one a green one either. So there's a long there. And then it pulls back. There's another one here, but that's more of a doji. That's more of a neutral bar. So I think you're better off to wait and see if you get a trap and a second entry, and you do. And so I like going long right there because that's two attempts to go lower. It's not really a second entry short. It is counting off the high, but it's not one counting from the low, and that's the ones you really like, and that's one right there. But now you've had a close outside and a new high. So I don't like going long right there, although you could have again, because now you got a counting from the new low there, you've got a failed second entry short. So I'm not against giving that one a green one, and it would have worked, but I think you're better off to wait and try to get a better setup than that. You get a second entry short right here, counting off that low. Actually, that's not a new low, so you really don't get a second entry short, but now you got a pullback, first entry, pullback, second entry, and that's a nice bullish bar with a reversal. So I like that one. And you're looking at this as a possible range, so you're looking for prices to try to go higher anyway. And so that's a really nice setup right there. You can see how many times we failed to go lower. Eventually, when prices try that many times to go lower and can't, you're probably going higher. And you can tell they trapped a lot of people to the short side because look how it burst up right there. This one fooled a lot of people. And but that's why you got to wait until you almost get a confirmed trend working in the other way. And because you can get fooled really easily sometimes. So wait on the better setups. Okay, I don't know if I'm ever going to get through this chart. That's another interruption. But anyway, yep, we had a nice short trap here that runs to the upside. And that's why you got to be careful about trying to reverse too quickly. That's why I like a second entry off the other side. And you did get that here. But, you know, and there's some reasons to be considering short. But that's why I think you got to be real choosy about your shorts. And, you know, that's why a lot of times when it becomes to a reversal, I like to wait on that that failed second entry that turns into a trap. And and we'll talk about that up here. But notice how we get back up here to the resistance. We weren't quite to the previous highs. We're close enough. But notice we tried to go longer. And then you get the second entry long here. But there's a lot of reasons to skip that second entry long. Mainly because your signal bar is not very good. You could have treated this like your signal bar, but even it doesn't close on the high, and then it breaks higher and turns down. And that's where you get your failed second entry long. So I like going short there, especially when that confirms the trend line working lower there. And this is not really the trend line. This is it right here, working down. And so that's what you're looking for a better clue that you got a reversal. And then it comes back, and this is like a little breakout pullback short right here. But more than anything, it's just another pullback to the EMA to test that when it broke lower and the trend line. So I really like that one. This one I liked, but the bar's so big, you're so close to the lows, you just got to skip it. And then, of course, down here, you know, you still haven't got back to the trend line. You finally get back right here. And this is off the midline, but you don't get a very good signal bar. You get another one here that looks a little more bearish, but I think you better wait on a second entry here. And then by the time you get it, look what happens. You look at this signal bar, not very good. Then this one's more of an inside bar. So again, I don't recommend going short. And guess what? It breaks lower and it reverses. And there's your reversal again, that failed second entry short. So that's why I always talk about how critical the signal bar can be. You want a good bearish setup. You're not necessarily looking for a reversal here, but you don't get a good enough setup to go short. And so you just kind of sit there, and when you get the trap, I like it to the long side because that confirms the trend line. Look where it's bouncing right off your possible trend line working up. So I like that one. And then now you get your break. The main reason I like this one is because this is your first break, but look how bullish that bar is. It's a big bar, so you got to be a little bit more, you either got to go for a bigger target or you got to be a little bit more creative on your entry with a limit order or something. But even a limit order, you can only get in maybe a tick back into that one. But it did break lower and then turn up. So you really could have gone long right there on the stop. But I think you're better off to wait on this bar to complete. But there's some, you know, I'd put it green for going long immediately when it broke above, but for blue, you got to wait on this bar and be a little more creative with it. Then you get another pullback here, but you don't get a very good signal bar, and by the time this one completes, you're right there at that high. You figure prices will probably try to go up here, but since you overshot the midline, you might undershoot the upper side that exact amount and turn back down. So you got to be real careful here. And you already have your break and new high, so this one you need a second entry or something else better here than going with that big bar on a first entry. And then I like going short right here. because you're way overshot. Look how far away you are from the EMA. You turn down right where the previous resistance has been happening up here. Um, it went higher and then turned and come down. I like going short right there, but you could have even gone short on the stop because look at all that room back to the EMA. This is real choppy and range looking. The odds are you're coming back from that EMA, and look at what happens. It just shoots right through. This turns out to be a great trade. Generally, I would say wait on a second entry, but there's some reasons to like this one. Very similar to down here. Um, so I like this one. I don't really see a good opportunity. You don't want to take that second entry after moving that far. You could consider it. I almost went with this one being green, but you're so close back to the midline that you just got to be real careful, and it ends up just kind of getting hung up. But when we tried to go lower again, notice how we bounced at the midline. We pushed through just a little, probably enough to trap a lot of shorts, and then we make a little higher low. So it's not a perfect setup, but if you're going to be aggressive, I like this one for a trap. And you can see it doesn't really take off like you would like a trap to do, like this one does. That's why this took off so and shot up like that, because it was a trap. So you didn't really fool a lot of people here, but there's probably enough people that are short here on the way down that they're going to start exiting pretty quickly as it goes higher. And you can see it doesn't even get back up to the highs before it's working lower again. And notice if you draw that trend line, you get the close outside and move to a new high. I don't think that's good enough to go short yet, but look how it pushes right back through the EMA again, and then you get a failed second entry long here, and actually a second entry short. So I like that one to the downside. You might have considered using limit order, and it did come back over here and fill it before it went lower, but you probably just want to use a stop right there on that second entry. You don't want to go short way down here. You're too close to the lows. And then guess what? You get another second entry right here, right at that trend line again, and turns down. And that's another quick, easy move. Then it pulls back. I made this one red because this is like a little, notice how it went just slightly lower here and then turns down. Notice that's like a two-legged, even though it doesn't look like it, you could treat that like a second entry short, and it's more like a breakout pullback short. Um, you could treat this, you could say, hey, we got to close higher here, but it's so close, and it was about time, after this many tries of it going higher. Eventually, if you keep trying to go higher and it can't, eventually it's going to go lower. And notice what happened here. This is the real clue. Notice how this high, then this one's a little bit lower, then this one's a little bit lower, then this one's lower than that one, then this one's lower than that. You're making lower highs here. This one's lower than that one. That is a good sign that, hey, we're probably headed to the other side of the trading range. And that's why I like that one. And that's why I always say you can't just look at this piece of the price action and determine that you might want to go short. You got to look at what's happening overall. And this is a good example of what I mean by that. Every time we came higher, we made a lower high down through here. And that is a good sign that, hey, the buyers are losing steam. And look how these new highs are not going very far either. And now your lows finally get to moving farther down each time. That's a good sign. We're going lower. It's really tempting to go short on this one right here. You can't go short here. You're coming off the lows. Even though you're probably headed down here, you figure it's going to come back to the trend line pretty quickly. Unfortunately, it just keeps working down, and you just kind of got to watch that go. You should have been up here. You should have been in the market up here, not trying to get in down here, because this is where you eventually get trapped. And look what happens. It finally breaks a little lower, and it traps people and runs the other way. And that's why you can't, even though it worked here, most times it won't work. So you got to follow the rules and wait on pullbacks to the key entry areas. And where is that? Off the trend lines. It's really off the strong support and resistance, and that's this trend line right here. So, and plus you did have this close outside, so you can't ignore the fact that you got two legs down. So that's another reason to stay out, even though it keeps going lower. And that's another reason you got to be real careful right here. This was a sudden burst, but what it is you got a short trap. And again, I'm not adverse to marking this one in green at all. The reason I did this is because we weren't quite down here, so there's a chance it could turn back to the EMA or the EMA and the trend line and come lower again, but it didn't. But it's not gonna. I'm not gonna mark that one blue, but I'm not averse to making that a green one again for a long right there, because they're probably gonna trap people with that big bearish bar and all how weak it's been. But it hadn't come back to the trend line or the EMA in a while, and that's where they trap people. All these people watch these other entries work, and they finally say, if it does it again, I'm going short. And I guarantee you, some of you listening probably did this. You probably went short right there, and you probably were thinking exactly what I just said, because I can remember doing it myself back in the old days. I sit there and I don't have the courage to enter, and it just keeps going lower, and finally I tell myself, all right, next time I'm getting short. And this is what happens to you. You don't wait on the pullback, and you get short and you get trapped, and it runs the other way, and you exit only to see it go exactly where you thought it was going to go, down for another scalp. And so that's why you got to be real careful. And but then you've got your break for sure. You're not sure about this one. It's so close. Your trend line might be a little flatter, but it turns down right here. You got your break for sure now. You got a new low. You tried to go lower again, and you make a double bottom, and you actually get a second entry long, counting off the lows here, a double bottom. And I like this reversal bar. This is really your signal bar right here, so your stop has to go down here. But you could enter this with a limit order if you liked. And off it goes. And now you've got a little double top here. So all that's happened is your resistance has dropped from here down to here now. And so you don't want to be getting long in here, but notice you got this trend line, you got a break, and you already got a new high too. I don't think that's good enough to go short right there until, let me show you this. When it broke higher right there, I guarantee you that's a fairly bullish looking bar. But look at all those closes, look at all that resistance across there. Don't go long into that. You know what's going to happen. Eventually it's going to break higher like right here, and you're going to get trapped. So that's what happens. It breaks higher, and it traps people, and it turns down. Just go short right there, and look at it. It doesn't drop straight down, but it keeps working lower, and eventually not enough people are convinced they're trapped yet right here, and a few more of them try to get in long here, and then when it breaks lower right there, they finally realize and they give up, and it capitulates down to the, but then they've run everybody out, and there's a bunch of buyers down here waiting for it to come below here, and then they go long again. And so the key is you got to sell high and buy low, but you got to look at the big picture of what's going on as well. You don't want to be getting long into this. You definitely don't want to be getting short into this, even though the bigger picture has been more down here than anything. You can't get short into all that support across there. So when it finally breaks lower right there, a real aggressive trader is probably going to go long right there. It went lower below that big bearish bar. And, everywhere you read on the internet, they're telling you to sell that. And don't sell that. You're better off to buy that every time than to sell it, because if you buy it every time, in the long run, you're going to make a lot of money. Because a lot of times you're going to catch the low of the day and watch it go for a long time. It didn't do that in this case because we weren't through working lower yet. But still, the first time, it's probably going to fail. And so we'll make that one green as well, just because some aggressive traders are going to buy that. But the smarter traders are going to wait till here, where you get a higher low and a second entry counting off this low. And that's when everybody realizes, hey, we're trapped. And look at that one bar. And that's because it's hitting all these short stops, and they realize they got to exit. And it shoots up real fast. And this one could actually be green here too. Because look at that. This is a small trading range. It's just moved down a little bit, and look at that failed breakout. Just like it failed over here, it failed over here. But guess what? We traded down into this trading range, so it's most likely going to, if when it does break out successfully, it's going to be the same direction prices moved into that trading range. So that's why we break, and look, that's exactly what happened. You break out and it goes lower. So I'm not adverse to making this one, because the aggressive trader knows what's probably going to happen here, and they're hoping, if you're lucky, a lot of times they don't come back and get your stops here, although they did here. Enough people aren't convinced to get in yet. They want to wait on that second entry, and that comes here, and it moves on down this time. And there he is, a shorter term trend line working up through here, and you get the break and two legs up to a new high. So that's another reason. But not only did this push through, guess where it did turn down at the midpoint, the previous support and resistance. It's now acting as resistance again. So that's another clue that you can go short right there. But you need to be really good at reading the price action to try to take these trades. Another thing that would lead you to take this short, look how far away you've gotten from the EMA again. And on range days, choppy days, you don't get far away from the EMA for very long. And you got all that room. So it's another reason. But then when you get that second entry short counting off this high, and look how bearish that bar is, just go short right there. It takes a minute, and there's actually a breakout pullback short right there. But I don't like it because you're back so close to this area, and there's a chance it bounces, which it does, even though it doesn't bounce very high. It's probably enough to stop you out right before it goes exactly where you thought it might go. And I didn't mark anything else in here because it's after 2, but this would have been a great short right here when you got this break lower. And look at that bullish bar, and it traps everybody, turns down. Man, you got to be going short right there. And then you get that one more little push up. You would have to go short at the low of the day here. And even here, this late in the day, that's probably not a great move. But that's a great trap, and I guarantee you people are going to get trapped and look at it go, and they just start running for the hills now. And as soon as they all are gone and there's no more, it's kind of like that final capitulation, then it rallies real big again. And that's what the market does. You know, even on big sell-offs like this, it eventually capitulates, finds that they run out of sellers because there's all the smart sellers were getting in all up here. And they run down, they're all taking profits here. And, you know, all the longs have finally been run out, and you run out of steam. And there's actually another trend line working down through here. You can see that. It looks like you might have had a break here. It's probably a little steeper. A lot of times it's usually right off the highs, and then I use the closes, but not always. So I'm guessing it's like that, and you get a close outside and a new low, and then it reverses. Let's just see how it fits on the other side. That's how I usually verify if I've got it right. And you see that fits real nice on the other side. Look how it fit down here. That's how you verify if your trend line's right. If you draw it over here and then you come over here and it doesn't fit very well, then you probably don't have it right. And you can do the same thing on this side. Draw it off those first 2 swings, generally using the closes. Usually, sometimes it'll be the closes off the low. You just start. I usually start with a very low and work it off the closes. But as I get more price action, I might try to. I'll double check it, and if it doesn't fit right anymore, and you see that's fitting really nice, then we start to. There's probably a midline in this one, and you can see it right up through there. That's how you do this. And you can see you wouldn't need much more price action than those first 2 swings to get that right. You can see that fits perfectly right there. Then you just find the center of those 2 moves right here. And look what happens. It comes into play, and it plays out perfectly the rest of the way. This is really late in the afternoon. And notice what happened. You got your break here. And it runs on retest to a new high and gets a double top, and then it's heading the other way again. Just typical price action, the way we teach it. So this stuff works. Is it easy to see? It's not that hard to see once you understand it and you've trained your eye to see it in real time. But in the beginning, yeah, you're doggone right. It's hard to see, and people will swear up and down you can't see it, but take my word for it. When you do this and you do it day after day, and you train your eye and you do your homework at the end of the day, and you study the chart and you study your trades and you study this stuff, you will start to see it. Because I've got students that do it every day and make money doing it, and they were just like you. They were just like me in the beginning. They could not see it, And when I first started doing this, I didn't see all this stuff. I had a little bit of help because I had an old timer that understood price action that showed me the basics, but I couldn't see it. I had to sit here in front of this chart, and I actually, after 10 years of doing it, I've added stuff, picked up stuff that he didn't even know about, and started using it, and it works. But that's from years and years of experience of sitting here. What he never talked about a failed second entry long or a failed second entry short. He never talked about traps really. He just talked about how to read the price action, knowing that when you got an uptrend, when you got a downtrend, what happens when you break out, when you have breakouts and stuff. He recognized all that, and he was an old timer, been doing it forever. Um, so there's probably other stuff you can pick up that maybe I haven't picked up because I stopped looking for new stuff, to be honest with you. Um, but that doesn't mean there's not something else out there that you might could pick up with more experience. Um, so just keep that in mind. But this thing's almost 40. We're 35 minutes into this today. But there's so many trades because of and again, going back, the price action, the volume and the volatility is still pretty high. It's not quite as bad as it was for a few days there, but that's a lot of volume for one day. So the volatility and the volume is still relatively high. We're not back to what I would call a normal market yet. And somebody actually talked to this person in an email today, and they were worried that it may not ever get back to normal. Trust me, at some point, things will change and we'll get back to normal again. And so don't worry about that. It's not back to normal yet. When will it be back to normal? I can't say. But trust me, we'll get back to it'll slow down and we'll get back to what I would consider a more normal market, more normal volume at some point. This happens every few years. You get a big rally period or you get a big sell-off period. Generally, the volume really picks up more on these sell-offs um, because the smart traders really move the market and they're starting to unload it at the peaks. I guess I should say the top of the rallies. They're starting to unload, and all that's when all the you start seeing it in the news. Markets making new highs, and what happens is the dumb traders. That's when they're coming in buying. The smart traders bought and been loading up for a long time, and the rally's ending, and that's where they're selling, and they're selling to the people on the street that are reading the news. But it's too late when you read the news. And it's the same thing on the sell-offs. You start seeing all these headlines about the biggest sell-off and single-day sell-off since 19 whatever or 2000 whatever, and all these traders get nervous and they start unloading all their stocks, and they're unloading right at the bottom, or they're unloading way after a big loss. And when if they just start buying there instead of selling there, before long it's going to rally and they make all the big bucks. But that's the way the market works. The average trader is trading off the news, and they're too late, where the smart traders are all ahead of the game. And the way you get ahead of the game is by understanding price action and reading the chart and knowing that once we were in this trading range and we broke lower, odds are if you draw your short, you're going to eventually catch the bottom and you catch this out of here. And you buy these little breakouts right here and you sell these breakouts up here, and you're really better off selling these up here than buying down here because we traded down into this. So the odds are when we do break out successfully and trend lower or trending or start trending again, it's probably going to be to the low side because we traded down into this range. I mean, that's one of our things we teach. And so follow the rules, and it's really going to help you. So anyway, this is almost 40 minutes. I'm going to wrap it up. We'll be back again to do it tomorrow. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.